Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Suzy Sevier and Michael Barnhart. They are owners and asset managers of 388 units across Oklahoma and Texas, and they host a podcast called The Adventures of a Real Estate Investor. And they've also created a monthly meetup for real estate investors living overseas and investing in the United States. So thank you so much for being on the show.
Absolutely, Charles. Such a pleasure to be here. Really excited to provide value for your listeners.
Yay.
Awesome. Yeah, I definitely believe you will. And so give us a little background on yourself, both personally and professionally, prior to getting involved in real estate investing.
Yeah, so I'll give a brief background about myself and I'll let Suzy jump in here in a second. So I am active duty military. I've been in the Air Force, U.S. Air Force for 17 plus years now. And basically my background is in program management for the Air Force, did chem biodefense systems for a while. And then finally got my dream job teaching, which is teaching at the Air Force Academy in Colorado Springs. And then they want me to continue teaching, so send me to get a PhD. That's why we are in Cambridge, England right now. I'm getting a PhD in biochemistry, finishing up here this year. Really excited to be done with it. And then we will eventually make our way back to Colorado Springs where I'll finish out my military career and retire. So
wow.
That's me. Yeah.
Great.
Yeah, and then for me, I guess right before real estate investing, I was a project manager for a biotech company here in Cambridge. But then before that life, I was in accounting. And once you get to know me, you realize that like my soul is not meant for accounting. And so I decided to get an MBA and kind of do a career change. And so that is what I did twice in the last 2 years, but that's okay. It works out really well.
Awesome. And then, so how did you guys get when you say you're in Cambridge, you're not in Cambridge, Massachusetts, you guys are in Cambridge, UK, United Kingdom. So how did you get the bug, let's say, and choose real estate investing as your vehicle? And, what kind of made the change in your life that you need something else in real estate? Was that?
Yeah, that's a great question. So for us, it all started with COVID. And so over here, we had 3 lockdowns total. And the first one was a little over 100 days, but we didn't know that, but everyone was sent home from work. And so I was working, from home, but Michael, doing wet lab research, it's not like he was bringing back home a ton of bacteria. And so we're like, okay, well, what are we going to do now for this first lockdown? Because we could only leave to go to the grocery store, the pharmacy, or work out once a day. And so we decided to do a mini book club with each other. And the first book was The Slight Edge by Jeff Olson. Mm-hmm. And in the back of that, there was an amazing, recommendation, reading list. And for us, it was perfect because it was cool, we don't have to choose anything on our own. We'll just buy a few books on here. One of those was Multiple Streams of Income by Robert Allen. And when Michael got to the second section, he was like, you have to read this. We need to figure this out. And from there, it led to finding bigger pockets. From bigger pockets, it led to finding from military to millionaire. And in that Facebook group, Michael had just posted hey, is anyone living overseas but investing in real estate? And we just needed one person to say yes for it to to give ourselves permission to be this is what we're going to do. So that was the bug. That's how it started.
That's awesome. That's fantastic. So tell us about your first real estate investment after you went through this extensive reading list. And that Robert Allen book is like a famous. I mean, I remember reading that years and years back, because I think the original copy came out like decades ago, didn't it? I mean,
Yeah,
it's
I mean, it's in this nice like 1980s style, like book cover.
Yeah, like
It's
purple and gold.
purple and gold, so.
It is.
nice.
But yeah, I can
Yeah,
share a
you
little
go.
bit about that. So like actually our first foray into real estate investing was actually we were gonna do single family investing first, right? We're gonna do like the BRRRR strategy, like so buy undervalued homes, rehab them, and then refinance them, and then rent them out. That was our goal. We were just gonna accumulate a bunch of these properties, and then slowly move into multifamily, which is like a 10-year goal for us. And anyways, we ended up getting 2 doors under contract in this one market that we did extensive research on. Spent like 2 months like building a team in this market as well. And then the unthinkable happened, like an inland hurricane came through, took out like 60% of the trees in the area, and the town was like pretty devastated. It was a very, very devastating, unfortunate accident, natural disaster. And anyways, come to find out, like none of the contractors in the area were interested in remodeling a rental property. They're more focused on rebuilding the city. And so like from that, like the financing fell out for our property. And then we ended up walking away from those 2 doors. But anyways, it was a blessing in disguise, because what ended up happening from that, instead of panicking, Suzy and I pivoted to our 10-year goal, which is multifamily. And so we just evaluated a different market, moved markets, built a team, and then just started submitting LOIs, make sure we had the right team, submitting LOIs in large apartment complexes. And from there, we got our first property, and then quickly accumulated several more after that. So.
Yeah, but then our first one though was 88 units,
Mhm.
just for the concept of we wanted a property manager on site like Monday through Friday, 9 to 5. So you just, that you have to get close to like that 100 mark, but for the 88, it worked. And so that's how we ended up, instead of going from 2, instead of trying to get 10 or 50, that's how we decided like to go up a little further, just because we knew that we needed somebody there for us being so far away.
Mhm.
Yeah, that's smart. And then you're also going to get some scales of economy with that as well, because it's going to help you a lot managing it. And then also when you go to your next property, I mean, it's really going to see that decrease in cost across everything. So for both of you, tell us, like, before you get into your team that you mentioned, tell us like what each of you handles, and like what your specialties are.
So now, because I'm doing real estate full time, so I left my job that I felt like I needed to get an MBA for in August of 2021. Yeah. So now I'm doing a lot of the broker relations, investor relations, asset management, because Michael and I are the lead sponsors from afar. And now Michael is doing the lovely role of underwriting, because although I was in accounting, the underwriting is just not that thrilling for me yet. So it's kind of how we split it. But at the beginning, Michael was doing underwriting, broker relations. I was doing a lot of investor relations. But now that I've moved full time, I've just taken more of that so that he can focus, well, 1, on his final year of school, but 2, just because it's fun. And now doing it all is wonderful.
So what is your current like investment criterion strategy? What kind of properties you're looking at, and kind of what's your goal with them as you're looking at them, underwriting them, and ultimately purchasing them?
Yeah, so what we're looking at right now is really stabilized assets. We like stabilized assets where we can get long-term financing on it, especially in fixed rate financing, especially with the rising interest rates we're experiencing currently. So we're looking at, C+, B-, or B. We've even dabbled a little bit into like A properties as well. This all depends if the deal works or not.
Yeah.
But stabilized assets, meaning 90% occupied for at least 90 days. We like that. And we like light value add, or like 4+, if you're familiar with that term as well. And that's kind of what we really target, like 70, like late 70s and above assets as well, vintage, and in B and C areas as well.
Yeah, like one thing that we noticed, sorry, right away, just because of like COVID, when we were on a lot of our runs, like the laundromats were either closed or you saw like an X on every other like washer and dryer. And we were like, that's a bummer, you know, like if I went to a laundromat and found out that half of them were closed and I had to like sit and wait, like what a bummer would that be, right? Because I've only ever rented. And so I like felt it from that side. And so like we also really try to see if we can add in, you know, washer and dryer connections and then washer and dryers, just because that amenity is loved by majority of the people that we chat with, right? Or the residents. Like they don't necessarily want like new paint on the walls or backsplash. If they can have a washer and dryer, they will choose that over a lot of other amenities or what like a regular renovation can give.
Michael, you mentioned two terms, light value add and core plus. Can you explain what those are for our listeners?
Yeah. So, I mean, the core plus and light value add there's not really delineation between the two. It's a gray area, right? But core plus. So core is like where you're just doing light turns every single time you're turning. Like there's no major rehab that's required when you turn the units. Basically, you know, when you turn a unit in a core property, you just clean the carpet, maybe touch up the flooring here and there, maybe paint the walls. Very, very light renovation is needed in order to turn. Like when you get into the more value add, you're thinking of like when you turn the unit, when somebody moves out, like you're replacing the carpet, you know, painting full paint, you're replacing countertops, resurfacing bathtubs, or even redoing the bathtubs, like, right? So like that would be, you know, maybe core plus of maybe $500 to $1,000 turn per unit. I'm just arbitrarily throwing numbers out there, but this is how I kind of see it. But like, and then like maybe a light value add, maybe like two and a half, you know, $2,500. Getting into the heavier value add, like when you're remodeling, gutting an entire property, that would be a heavy value add for those units. You're putting like $10,000 to $15,000 in per unit.
So you're getting better financing, longer term financing, fixed rate financing, because these properties are in better shape, and you're pretty much going in there doing minor things to increase, just increase efficiency, increase the value by increasing rents, but also decreasing a lot of probably expenses that you have there that a lot of apartment complexes have that are just not needed. You know what I mean? Mm-hmm. And so that's kind of, I see, as I understand exactly what your business model is, that's great. And that makes sense because it's a lot easier to do that. And you're gonna have a lot more consistent cash flow for your investors with that model. So that's great. Suzy, I want to think you utilize, I believe it's probably you that you're working more on this, because you're utilizing, as I've understood, both of you are virtual real estate events to build your network. And you start doing this. And can you explain how you started them? Because this is something interesting. This is like your thought leadership, I guess you would say. But I haven't seen it really done virtually in meetups before. So how are you, how'd you start it, and how are you effectively marketing it and ultimately building them up so that you can utilize them as potential, active partners or passive investors?
Yeah. So at the very beginning of all of COVID, right? Like so many people just took their meetups and conferences virtually. It's like how Michael and I utilized that at the beginning was that we were probably attending, 8 meetups a week. We went to 10 to 15 conferences in 2020. And what we did was actually, because the majority of it was in Zoom, or somebody had made a spreadsheet where you could have your name, your email address, LinkedIn, whatnot. And we would snip the screen and just actually follow up with people, right? And be like, hey, we didn't get a chance to chat at the meetup or at the conference. I'd love to get to know more about you. And because of that, a lot of people didn't respond, but a lot of people did, which is perfect. But that's just how we slowly gained people's trust, right? Because at the beginning with Michael and I, it was wait a second, you're in a different country. Are you real? Will you actually show up again? And so because of the consistency and because of reaching out and then creating content on top of that, we remained top of mind for individuals. And even what do I mean by that, right? Like, why is it important to stay top of mind? Well, when Michael and I started telling people like, hey, we're in Tulsa, we're going to be in Tulsa, that's where we're going to start investing. Like, somebody who had seen us in a lot of meetups and conferences and knew, right, that we were people who were going to stick around, had said like, hey, I have a connection in Tulsa and I think you'd really benefit from this. And that connection, like that individual ended up becoming like an organic mentor for us. And that was huge, right? But then now a lot of like meetups and conferences have gone back to in person. So like us keeping the virtual one from over here, just from a military side, right? So active duty and as a military spouse, like giving other people like the hope that they can do it from anywhere is huge, because you can, like with the right systems and processes in place and just being consistent with showing up. So like if nobody in your pact, right, like where you live is entrepreneurial, because like even over here, like our friends group in Cambridge, when like initially when I had said that I was leaving my job, they're like, oh, like, are you looking for something else? We're like, no, we started a business. They're like, so do you need any recommendations on a job? I'm like, no, this is really, like, so it's just a different mindset, and that's totally okay. But staying virtual and just being there for other people, especially when people were there for us, was like the biggest part of why we keep doing it, and like why it's helped us, like even within our marketing, because I want people to know that you can do it from anywhere. And like, that's the message that we want to give, because you hear people who even have families, right, who say like, oh, I wish I could do this for a month with my family. It's like, no, you can. Like, this is real no matter where you are.
So that kind of brings us into my next questions, which I kind of asking because I've lived abroad while doing real estate still here in the United States. And prior to COVID, my wife and I used to spend several weeks, if maybe like 2 or 3 months a year, almost 2 months a year outside of the US while still running real estate back in the United States and stuff like that. So tell us how you manage your US business while traveling abroad. And I mean, with everything that goes with it, between time zones and between, internet and over like the whole 9 yards of everything that people probably aren't thinking about when you're living in another country.
Yeah, I think the biggest thing that's helped us manage everything from afar is just leveraging a project management software tool. So we use Asana. It's like Monday.com and Trello and everything like that. It's very similar to Asana, but Asana, we have all of our general partners on that. We also have we asset manage through that. So we do our acquisitions through Asana, but then we transition asset management through Asana as well. And so we have all of our properties plugged in there with all the on-site managers, all the regional managers, and the CEO of the property management company all plugged in there, and the CFO and everything like that. So everybody knows exactly what's going on with the property. And then what the great thing is too is like they can upload bids directly there. You create a task, getting the roofs replaced, right? And you upload the bids on there. Say, okay, we approve this bid. And so you keep a track record of everything, but then it's not like emails where you're going back and forth and you're trying to find that email. Okay, who sent the other bid about the roof, or who sent that bid, or which bid did they approve, things like that. Everything just handled directly through Asana, and it's lovely. And then, it is. And then, so with that, we also track, KPIs digitally as well.
Yeah.
And what else do we use? We use, obviously use Calendly to set up all of our meetings and Zoom and stuff like that. So all the tech stuff, we just really leverage all that. But Asana is probably the biggest thing for us.
Yeah, and I think the biggest thing is to remember that, like, if an emergency arises, like while we're sleeping, right? Like if something were to happen at the end of the day, like that emergency would have to be taken care of immediately, regardless of where we lived. Like if there's a huge plumbing issue, I'm not going to be like, no, like, let's wait till tomorrow, right? Like that would never happen. So they know that like doing that is more than okay. But I think it also is like having those conversations at the very beginning of like, this is how we want to treat the residents. This is how we want our community to like be. We want the residents to know that like they are very important. So if they have a problem, it's going to have to get fixed. So like some problems, literal smaller problems can wait, like if somebody has like a missing board in their fence, like that is not as important as somebody whose electrical panel doesn't work anymore. You know what I mean? So
Yeah.
but having that conversation with your property manager is super important too, because then they know what like we would probably say yes to and what we would say no to, so that they can make those decisions if they have to be made like that. Or we also have the conversation of like, most things can wait till the next day, and that's okay both ways. So
Right. Yeah, it depends. I mean, obviously you have that flexibility. Of them knowing a specific amount that you're going to, hey, you can do whatever you want up to this, this amount. And then it's like, hey, if there's a hot water heater that's leaking, obviously replace it. You don't have to call me. You know what I mean? Call me afterwards or let me know in my like weekly report or whatever it is, what got done. But it's not something that's like a major thing that needs to be taken care of, or someone's AC is not working or something like this. I mean, that has to be done. Obviously, if you're replacing the whole, that's something you want to talk to me about. Or if we're taking bids for large CapEx, like you said, Michael, roofs and stuff, that's definitely a great way of doing it through Asana. But, it's everybody. And I think as you get more comfortable with your property managers, you're going to start raising that limit a little bit, and have them take care of more things. So something that might have started around 500, you know what I mean, as an arbitrary number, that might be at 1,000, you know what I mean? And it might be at 1,500, where people are just like, listen, this had to be done. I did this, this is you know what I mean? And then you kind of have that, you have people taking stuff off your plate and making decisions that's going to keep the property in good shape, and then keep your tenants happy as well, which are both very, very important.
no, totally. And even at the very beginning, we found out that although our property manager is, at the property all the time, that does not mean he or she, even the maintenance guys, right, or our regional, knows what a syndication is. And so like even explaining that, like, this is why we have to do these things, because it's not Michael and I that have millions of dollars for this down payment. Like, let me explain the entire process to you so that you understand where it's all coming from and how it even works. Mm-hmm. And that definitely triggered a few light bulbs, like, oh, I didn't know that. I'm like, I'm glad we had this conversation today.
So tell us about your team that you have back in the United States, and then how often you're physically back in the United States for properties.
Yeah, so we have quite a few team members now that are kind of located in or around the area. Obviously, we know, now that our team has grown so much since we've moved into the area, as far as like, well, obviously we have one property management team that she and her team like run all of our properties now, which is awesome. Obviously we have a team of vendors that we trust, entrust now, to look at properties for us and things like that, go out and get bids and stuff like that. But then we also have like syndication partners that are also in the area. Because Suzy's now full-time and COVID restrictions have been lifted for the majority.
Over here.
Over here, yeah. She's been traveling back once a month, roughly.
Yeah.
It was going to quarterly, and it's kind of picked up now, and it's because we have more and more going on. So, yeah, about once a month we travel. Well, at least Suzy travels back.
Oh. Nice. Yeah, it's great. Yeah, if you have the team on the ground, I mean, it takes care of a lot of issues, because especially you have people that are, reviewing different parts of the properties, and they're reviewing potential acquisitions. I think the hardest part is just getting your first acquisition. And then after that, your team members are going to take you a lot more seriously and spend more time with you. And then I think that's when it really starts rolling, because now you've proven yourself to these vendors that probably get emails and calls throughout the week from new potential investors that never pull the trigger. Yeah. So once you've done that, now you're on a whole nother level, a whole nother spreadsheet, let's say, of, hey, this person, I'm going to actually review financials when they're buying their, seventh property or whatever, and help them, close this, because they're going to put this management with us, which is an awesome place to be in.
Yeah. And it's even just like with the vendors and whatnot, like just treating them like people, right? Instead of just workers also, like that makes a huge difference. Cause I was there like in Tulsa most of October and most of February. And when I mean most, I literally mean almost every single day of the month. And so like we really got to like know each other. So now I can call them and I feel much more comfortable like calling them and talking about something, you know, like even one of our contractors the other day called me and he's like, "Are you mad at me?" I'm like, you're going to know when I'm mad. I'm not mad. Yeah. And so like, it's cool that we've even gotten to a place where he feels comfortable enough to even ask if I'm mad. I'm like, no, you didn't text me back. I'm not mad at you. I thought you were mad at me. You know, just like little stuff like that. And so it's cool when you can like create just those deeper relationships. Because then, you know, like our goal is not to always just have one property forever. It's to like improve every property along the journey. And so when you can include some of the same vendors for all of them, it's awesome.
Yeah, that's fantastic. That's where another thing that helps with your scales of economy too. So you're going to get you're going to get a decrease in costs for everything that you do and everything moves forward. And then you're going to have a much tighter ideas when you're evaluating new properties, when you're doing out your performas of what stuff's going to cost, because you're doing it so often and you have that relationship with the vendor. So if something goes up in price, they might work with you on it if your numbers were off from, which is where we are now with all inflation happening and stuff going up every month. Mm-hmm. But with you guys reviewing so many properties, buying so many properties, working with passive investors, working with GP partners, vendors, what are some common mistakes you see real estate investors make, whether you've seen them firsthand or whether people have sent you any kind of underwriting or deals they're looking at? What do you think are mistakes you're seeing, not just from new investors, but also maybe experienced investors too, at where we are now in the cycle?
I was going to say not asking like clarifying questions, right?
So that's a good one.
Yeah. I mean, like getting down to like the hard part of the conversation. And I don't want to, like, I think a lot of people assume that when somebody asks a question, it's like, oh, well, they don't trust it or they don't understand it. It's like, well, no, they don't understand it, right? Like a confused mind says no. And we don't want to say no over and over and over, but asking clarifying questions can seem difficult to do, but that's really where you get to the core of somebody's underwriting, or you get to the core of like why somebody actually wants to invest in real estate investing, or how much money they think they can like raise for capital, or why they decided to go with, you know, that lender with a variable rate, all of the above. Because like if we don't know people's motivations, like active or passive, for real estate investing, we actually don't know how a deal will go, you know, or we don't know how somebody will react when it comes to like how a GP team works, right? Because as a passive investor, if I really need the money, like because I want to build something faster than what the deal could do, like that's when somebody could say like, oh, I don't know if this is a deal for you, right? Like we're looking for 5 to 7 years, not 3 to 5 years when you think you would want the return back. But like if you don't actually ask right clarifying questions or deeper questions, you never get to know those answers. And those are huge because it just changes the vibe of the deal, no matter what side you're on. What about you? What do you think?
I was thinking of it more from an underwriting perspective. Okay. Like, I see people not bringing enough CapEx, and then they get in trouble, and then have their capital calls early.
We don't want that.
Also see people being very, very aggressive in year one. You know, over 5% increase in rental collections, which is, you know, it takes like 3 or 4 months to get your feet under their property when you move in there. And then you have another, you know, 8 months to try to like push those rents to get significant increase. So like I usually underwrite something less than 5% in year one, and then around 10% in year two. And then obviously with inflation, a lot of people are being very aggressive with rental increases. So, you know, 5% plus, which I think is very significant. And then you look at their exit price and you're like, and you expect to get, you know, you bought it, just say hypothetically, you bought it for 100K a door, and you expect to exit for 200K a door in 5 years, when it's just a, you know, core plus or a light value add deal. Might want to rethink that, right? So
yeah, the other thing too is that people put those they're taking historic rent appreciation from, when I say historic, could be, 12, 24, 36 months ago. And they're saying, oh, that's going to repeat itself. And people should be more aggressive on your insurance going up versus, you know what I mean, in your taxes going up versus, hey, rent's just going to keep on going up at this, phenomenal rate. And the other thing too, is during any type of light value, any type of value add at all, you're going to be, like you said, I love how you said too, is like 3 to 4 months. And I usually call it like the first 6 months. It's like initial stabilization. I don't even know what's going on in the property, to be honest. I mean, you have ideas of what's happening. You have an idea of who's paying, and you have an idea here and there, but you really don't know until you actually get in there and all your vendors have been switched over. You got rid of all the old vendors. Your new management is like comfortable with everything. You know exactly what units are vacant, which ones aren't. And you're just reading off this rent roll and you're hoping it's like still accurate. And you're kind of like calling people that aren't there and all this kind of stuff. But the thing too is that, so I love that about that, but it's like, you're also kind of shaking it up a little bit, and you're going to have whatever the vacancy is going to increase. And you're going to have, while you're doing these, there's going to be longer than what the person was doing before. You know what I mean? It might take you 3 weeks for a unit versus 1 week. You know what I mean? When they were doing it before, because you're doing more work to the unit. Hopefully it's less than that, but you know what I mean? So it's like, these are things that people don't, I see going on your point of what people don't factor into their underwriting when I look at it.
Absolutely. Yeah. And we've found this out as well, is like when you take over a new property, a lot of the residents will push back and see what they can get away with, right? So they'll just like, how long can I go without paying now, right? And then we're like, oh, maybe I'll just pay a little bit here, or pay a little bit here.
Or like the old manager used to let me do this.
Yeah, exactly. So like, there's a lot of those issues you have to work through, right? It might take like you said, 6 months. Yeah, we don't even start distributions for our properties until we're through an entire 6 months of operations, just because we don't know what's going to happen, right? So
yeah. It's smart. It's the most conservative way of doing it. And, the worst thing ever is going back to your investors. But when you have that, whatever it is, 5-6 months that you own it before you're doing distributions, it gives you an idea of figuring out exactly 100% what's happening at the property prior to start paying money out. And they're actually returns that you're, distributing, not just money that, investors gave you earlier on. So that's awesome. That's fantastic. So what are some of the main factors that have contributed to your success? I mean, and you guys have been doing this for a handful of years. So like, what have you seen in growing so fast and growing teams so fast, especially from being, 5 time zones from the United States?
Yeah, I think for us, it's just a lot of people take in a lot of information. There's so much information out there, right? Like, it is scary to spend tens of millions of dollars on apartment complexes, and then and especially raising millions of dollars for investors, right? Like, make sure that you're properly educated enough to the point where you can start taking action. And once you can start taking action, take action and make decisions, right? And take action, make decisions, take actions. A lot of people will get decision fatigue, and then they just they don't know what to do. And then they have, analysis paralysis and things like that. Like, for us, it's just like, okay, if I didn't know something, I'm going to read about it, and then I'm going to make a decision, right? And then next time it's just easier and quicker. So just continue to take action, I think, is the biggest thing for us.
I was going to say another thing that really helped, and this is more just after our very first deal, because we didn't know how it would go, and people don't really talk about that during meetups. And so we went through every single email and created an entire checklist. Okay,
smart.
This is what it was like before we submitted an LOI, all the way through, closing, even for a couple of weeks, just so that going into the next one, it wasn't oh my gosh, let me look back at the emails now to see what I can remember. It's okay, these are all the things that happened. Granted, right? We might use a local bank instead of agency debt, but financing is still there, right? You can still kind of figure it out. And it just, even when Michael was talking about decision fatigue, it kind of takes a little bit of that away, because it's there, and you can either, allocate it to somebody else or just get it done super quickly, because you're oh, okay, I know what to send this time. I know what is needed this time.
Yeah. Having that processes checklist, and it starts you off as systems. You've documented what you're doing, and now, going back to it, this is what I did, and I should have, this should be moved up here, and this should be, but then it's after a few properties, after a few things with anything, you know what I mean? Then you're kind of moving, smoothly. So how can our listeners learn more about you and your guys' businesses?
Yeah, so I think best way to find us is just go to our website, adventurousrei.com. You can find out more about us on there. But one thing we really didn't get to talk about too much on here is just the impact that we leave with our residents. That's our main focus, right? And Suzy and I focus on what we call our own ROI. It's a different ROI. It's a return on impact. And so like Suzy kind of mentioned a little bit about like looking for, maybe adding those in-unit washer and dryers really make that experience for that resident even better, right? And so that's what we always look at when we're underwriting, looking at different properties, make sure that we can develop a business plan that has the largest impact on the resident base. And so if you want to learn more about like what return on impact is, you can go to adventurousrei.com/impact. And there's like a little guide thing that we talk about return on impact and how we use that and leverage that in our business. So that's the best way to find us. Obviously, we're on LinkedIn, Michael Barnhart and Suzy Sevier as well. We're very active on there. You can find us and connect with us on there.
Awesome. And the links for your podcast are well as on your website as well, because I was checking it out yesterday. So a lot of great information there for anybody that's interested in following your footsteps of buying an apartment complex, whether it's being based in the United States or being based abroad. So that's awesome. Well, thank you so much for you guys coming on, and looking forward to connecting with you in the near future.
Yeah,
Absolutely.
thank you.
Thank you,
so
Charles.
much.
It's such a pleasure.
I'll talk to you soon. Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.